Hi everyone, Nancy Turgeon here with Cape Cod Like a Local. Welcome back. Today I have the pleasure of introducing Scott Hofmann. He's from Stonegate Mortgage. And with the market that we're in today, I feel that we need some definition of the rates and what's affecting them and how we can help you move forward. Scott, can you tell me, I know that the rates are around 7% at the moment. Can you tell me what makes that rate 7%? What drives that?
Yeah, no, thank you very much for having me, Nancy. And there's a lot of different factors that go into the interest rates and what drives them up or down. The number one factor right now is inflation. Inflation is that beast that the Federal Reserve wants to tame. We've all been beneficial of the property values going up, but with the property values going up, everything else has gone up as well. Yeah. It's gotten to the point where inflation is out of control, to the point where the Federal Reserve this month, it's November 2nd, they're already enacting another rate increase, and the word is they're going to do that again in December.
Wow.
So there's a lot of factors that go into it, but the main one right now, and we've been told this for a while now, is that inflation's got to get under control. And so that means that with the interest rates going up as much as they have just in the last 3 months, or even 3 to 6 months, you're going to see them continue to go up for the rest of 2022.
Okay. Do you feel that when the Fed does raise the interest rate, that it takes a while for that to take effect?
Yeah, I mean, when the Fed raises the interest rates, a lot of the mortgage companies, a lot of the mortgage lenders have already kind of baked that into the cake, so to speak.
Okay.
They're not anxiously waiting to hear what the Fed says, because they've already got kind of an idea of what the Fed's going to say. So, and again, what the Fed's trying to do is shock the short-term interest rates. Because they want to see the results very quickly. So our hope is, and again, nobody knows for sure because there's other factors besides inflation that go into it. But our hope is, and some of the projections say that next year, 2023, hopefully by the second half, that interest rates will be coming down. When the Federal Reserve raises interest rates, they need to have some time to collect the data to see if it's taking effect.
Okay.
And so I think right now, even in the short term, I think it's some positive signs are that, even though none of us really like the housing market to cool down, and we all like the rates to be as low as possible, it sometimes has to get worse before it gets better. And with the slowdown of the housing market, with the interest rates going up, of course, it's typically a slower quarter of the year anyways. I think, and everybody's kind of telling us that, they'll have enough data by June. And if everything goes well and they can get the inflation down a little bit, that should give a little bit of a reprieve to the interest rates, we're hoping.
Excellent. Yeah. Let's hope that happens.
Sure.
Have you found that clients, I know 30-year fixed is probably the most popular product that is out there. Have you found that you've had to adjust your offerings to clients, to buyers?
Sure. It's a competitive market out there, right? And there's not as many deals or loans out there as there used to be. So obviously you have to adjust. You have to, work harder, provide the best service you can, go out of your way for customers, and obviously try not to give them any reason to go anywhere else. The interest rates, obviously you want to make sure you're always giving them the best interest rate that you can. As mortgage brokers, and we have access to quite a few different banks and lenders out there.
Nice.
And that's one of the benefits. But, the interest rates right now, they're so high compared to what they used to be. But, they're still not the worst they've ever seen.
That's true.
They have been higher. And so I think, there's a lot of factors that go into when people are deciding if they want to buy a house. And when the interest rates are high, sometimes that makes people pull back. But, we have a saying, which is, you buy the house and you date the interest rate. The interest rate, you're not going to keep it for 30 years. That's just statistically true. And, who knows, if you buy a house right now, good chance that you'll be able to refinance maybe the second half of next year and lower that interest rate.
Okay.
So that's our hope. That's everybody's hope.
Also, what I've been doing is advising buyers that maybe they came in with a budget of $650,000, and maybe that changes what your buying power can be. $550 might be right at that payment level that you really should have been at, or would like to be comfortable at.
Sure.
So it's both sides that we're working to make sure that the client is taken care of and that they get the best deal and always the best service.
Absolutely. There's a lot of things, like you said, with the property values being up and then the interest rates going up as they have. that's put a strain on people's pocketbooks and what they can afford to pay.
Right.
So, there's been a lot of people that have had a fall out of the market, certainly. Unfortunately, we do think that they'll be able to come back into the market, next year, if everything goes based on some of the projections that we're seeing. But, we're optimistic about next year. We're optimistic even, with the number of homes on the market right now. It's certainly, in that sense, a very good buyer's market out there. There's more inventory, so there's more homes to choose from. So we think it's still a wonderful time to buy.
It sure is. And, there's always someone that needs to relocate. So someone always needs to buy a house.
Absolutely.
So it's our job to make sure that that's nice and easy for you and seamless. Scott, thank you so much.
Oh, you're very welcome. Thank you so much for having me.
I so appreciate it.
My pleasure. Thank you so very much.
If you have any questions about today's video, please reach out to Scott or myself. Our details will be in the description box below, and we look forward to helping you. So for now, see you next time.
Thank you. Bye-bye.